Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zittis, and this week's title is Green Light for Bullion. Gold's price continues to woe investors in the second quarter of the current year, as in the latest sessions, the precious metal reached 7-year high levels. Yesterday, gold broke above the 1700 psychological threshold and managed to stabilize over it. The upward momentum continued today in the Asian session, and gold reached and stabilized even higher. In this report, we aim to investigate what exactly is fueling gold's price at the moment and blend our own ideas of where the instrument could be heading. First of all, we find it extremely important to point out that gold is currently operating in its element as a safe haven asset. What we mean by this is it's currently displaying its sensitive nature towards economic uncertainty and fear. Gold's activity in March and April so far are clear evidence that it mirrors the mood swings in the financial markets after the coronavirus outbreak. In just 2 months, the precious metal has made large swings up and down that surpass $200. Gold's market movement has traditionally been a measure of confidence and doubt in the financial markets. It must be said that major financial institutions like Goldman Sachs had warned in the past months that the precious metal could head higher. One of the basic reasons they believed this move was possible is what we are currently seeing happen in the US and Europe at the moment. Economies are finding it very difficult to deal with matters that are coming from a number of directions simultaneously. First, they are preparing economic support packages for households and businesses in order to keep them going. The packages could be aimed at reducing unemployment as much as possible and prevent businesses afflicted by the virus from going bankrupt. On a more positive note, the packages could also set the ground for businesses and the economy in general to rebound faster once the circumstances improve. However, these measures may not be enough to cover for the economic damage suffered so far. Fears of entering a recession are becoming more evident as loss in output and a sharp rise in unemployment could be difficult to overcome with financial stimulus packages, in our opinion. Furthermore, other research institutions like Moody's expect the US economy to shrink in the first half of 2020. We are referring to the US, yet the same circumstances that may be even worse may apply for Europe. Anyone reading reports from well-known research institutions could find information indicating that it is currently a very difficult and unprecedented economic situation we are going through, with economic activity being very low compared to what we are used to. So, in our opinion, gold traders aware of the current circumstances will need evidence that some stabilization is taking place before cutting their long positions. Moreover, and on a simpler note, the loss of liquidity from banks and businesses may be another significant reason for investors to use gold as a hedge instrument. Stock markets are already down for the year and bond yields are descending, not leaving many choices for investors to cover for losses. As a conclusion, some of the upcoming financial releases during the next days could be gold movers, and so we would like to close by mentioning them. On the 15th of April, we get from the US the retail sales figures for March, while on the 16th, we get the weekly initial jobless claims figure, which has been of great interest in the past weeks, as it has been rising notably. Moving now to our technical analysis, this is gold's 4-hour chart. Evidently, gold's price continues to move higher since the start of April, which is noted in the red horizontal line on our chart. Today, gold tested the R1 1725 resistance level, but was not able to breach it for the time being. In our opinion, the next possible stops above the R1 are the 1750 R2 line and even higher the R3 1775 level. In the opposite direction, and selling momentum could send the metal back to the S1 1700 support level, even though it could also make a brief stop nearby 1710. However, below our S1, we note the S2 1685 as a possible stop point that was tested consecutively from the 9th of April until yesterday when it was surpassed upwards. Even lower, we believe the S3 1665 is also a possible stop and was last seen on the 9th of April. Please note the RSI indicator below our chart is currently above the 70 level, confirming an overbought trend. Yet, as it is lower than yesterday's high when it reached 85, some stabilization is evident for the time being. If you found something in this report that you found useful, make sure you apply it to your trading. That's the whole point of this report. Thank you very much for your time and enjoy solid trading.